Ladies and gentlemen, Yali Madat, and welcome to EPB's three-part webinar series entitled Reinventing Your Business for the New Normal. This afternoon, we will be discussing part one, cost control, compliance, and the shaping of the new normal. And it is my great pleasure and honor to introduce two very accomplished young Ismaili gentlemen who will be giving us their insights, opinions, and recommendations. Our first panelist is Mr. Al-Karim Jiwa. Al-Karim is the Finance Director of Diamond Trust Bank. He has been with DTB as its Chief Financial Officer for several years now. Al-Karim has previously served with the GRB as Honorary Secretary and at the Khan Council for Kenya as a member. He is a Fellow of the Association of Chartered Certified Accountants and a member of the Institute of Certified Public Accountants of Kenya. Welcome, Al-Karim.
Thank you, Rahim.
We're also grateful to have on our panel Mr. Rahim Mauji. Rahim is the Director of Sabre Business Consultants. He's a qualified CPA in Canada and Kenya and has been a practicing auditor for over 13 years. He specializes in helping his clients restructure their businesses, innovate, and deal with tax compliance issues. He also strives to help his clients get peace of mind in today's busy world. My name is Rahim Darani. I am the Honorary Secretary for EPB Kenya. Thank you very much, panelists, for joining us today. So if we may start. The first part of this webinar is to look at cost control and compliance. And Rahim, this is your area of expertise. So if we can start off with our first question. A lot of companies are having difficulty managing their cash flow. Money seems to be draining faster than people had anticipated. Can you share some examples or case studies of what other businesses are doing to control cash flow better during these times?
Sure. I have a presentation, so let me just share that.
Yes.
Yeah. Okay, so this presentation is titled Cash Flow Management. And before I get into some examples and case studies, I'd like to first just explain how I've structured this presentation. So I've divided it into two segments. The first segment will talk about some cash flow management principles with particular focus on difficulties that clients are facing. And the second half of the presentation will now get into some of the case study examples, and hopefully there'll be some nuggets of information there that people can take and apply in their own business. So let's get into it. If we look at cash flow management, let's take an arbitrary business. It's important to think about how money flows into and out of your business. The more detailed that you can think about this and the more detailed that you can articulate the flow of funds, the more effectively you can develop a strategy for managing cash and slowing down its burn rate. So essentially, cash will come into your business from customers. Either you will render a service to them, or you will probably sell a product, so you may have inventory. Cash then flows out of your business, primarily in these three areas. You have supplier, you have taxes, which unfortunately we can't avoid, and you have contractual obligations. Contractual obligations are anyone that you have a contract with. So if you are renting your premises, you probably have a lease and a landlord. A lease is a contractual obligation. If you have borrowings, you have a contract with the bank. If you have staff, you have contracts with staff. So the reason why I'm highlighting this is because contractual obligations are usually obligations you have to pay, irregardless of whether your business is doing well or not. So what I'll do now is I'll now touch on these particular areas, but I will focus on some of the difficulties that we have seen clients face. And we'll talk about now what you can do, some of the financial impacts that are affecting customers, as well as some of the tax implications that will be affecting people. So let's talk about customers and collections. This is probably one of the biggest things that people are struggling with, where they're saying, look, I'm unable to collect money from my customer. What can I do? You know, before we get into it, I'd like to emphasize this point over here. You will need your customers when the situation recovers. It's very important to bear in mind that your customers are your customers because you have built up a relationship with them. You have developed a favorable product, or you've developed a favorable service, or you've developed an exceptional experience. And over the course of all of this time, people have trusted you with their money. So what I would like to stress here is how you handle yourself over the next 2 or 3 months during this period of crisis will determine whether your customers come back to you or not. So it's very important that people handle themselves with a sense of integrity and a sense of professionalism. Now let's get into some of the complexities. So most customers are complaining that they have a bad debt problem. They have debts outstanding to them from their customers, and their customers are not paying. They're saying, now I have a bad debt. What do I do about it? So first and foremost, you do get a tax deduction on the value of your write-off. So if a customer owes you 1,000,000 shillings and they are unable to pay and you have to write that off, the 1,000,000 shillings goes in as a deduction when we are now computing your taxable income. However, there are certain considerations you have to keep in mind in order to allow this write-off. First of all, KRA makes it very clear you must exhaust all methods of recovery. So this is very critical. This is intentionally left vague by KRA. What they have said is that they want you to pursue your customer until the last resort. So that means you might have to send debt collectors, you might need to send legal letters. If the company has not shut down but is still in existence, take them to court. So KRA wants you to do all of this before you are able to write the amount off. Now, having said all of that, what's very, very important is that you must keep supporting documentation in your files and in your business. We always advise our clients that run your business as if you will get investigated by KRA. And I think that's a very sound principle to adopt now more so than ever. So whatever you are doing, whether you're sending emails or you're sending debt collectors or sending a legal letter, keep a copy in your file because it will come in very handy in the future when it comes time for a write-off. So let's talk about what you can do. You know, when we talk about sending debt collectors and sending legal letters, these are aggressive forms of collection. Sometimes what you can do is just have a conversation with your customer. If you go after the full amount, your customer may get scared off and say, look, I can't actually pay the full amount. But sometimes if you're able to work out a strategy where they can pay in small installments, this is much more agreeable to them. Maybe they can manage this a little bit better. Other things that you can do if you are in a position to give a discount or a credit note, I would encourage you to do so. What you are doing is giving a kind gesture to your customer, and your customers will remember this. They will remember how you supported them. So this word of support, I've raised it over here, but you'll find it coming up again and again during this presentation. Most people that are in difficulty will be seeking support from people. But as far as possible, if you can give support, it works just as well. It's very important to set your reputation as someone that can give and seek support at the same time. So like I mentioned earlier, if these are unsuccessful, then you do need to engage a debt collector and you do need to engage a lawyer, and obviously keep documentation in place. I keep repeating this point about documentation because we have found so many cases where customers have had phone conversations or physical meetings, but nothing has been documented. And then it becomes very difficult to prove. So please keep documentation in your files. So just lastly, very important tip, it's important to pursue the debt. Right now, I know you may be finding it difficult to collect from your customers, but don't stop pursuing the debt. Keep phoning, keep sending emails, keep trying to set up a meeting. What you want is to be in your customer's mind as we start to recover from this situation, and inshallah, we will recover. But when we do recover and business does resume, you want to be primary in your customer's mind. Secondly, seek legal advice, particularly if you have a contract with your customer. So these would be situations like if you are a security company and you have a long-term contract with your customer, it's important you seek legal advice about whether your customer is able to fulfill the contract or not. Secondly, seek tax and financial advice. There are going to be tax impacts when you start writing off debt. VAT is a primary one, for example. You would have paid the VAT in advance and now you're writing the debt off, so you've never collected it. So it's very important that you seek tax advice about what to do in your particular situation. And lastly, if there is this concept of having strength in numbers. So if you can talk to other suppliers and come together, you probably have a greater chance of getting the debt. Okay, so now let's talk about suppliers. So now I'm going to flip the coin around and put you in the hot seat where people are calling you for money and you don't have the money to pay. So one thing I'd like to stress is that communication is really key. You have to understand that your suppliers are human and they understand because they're in the same boat as you are. So if you sit down and have a conversation and tell them openly that, look, we are in difficulty, we do want to pay, can we work out a payment plan? That usually goes a long way. It usually sets yourself in high esteem with your suppliers. Secondly, see if goods can be returned. We've had very good success with this, where suppliers have said, sure, we'll take it back and we'll hold it for you and we'll issue a credit note. So you bring your debt down this way. And lastly, it's very important that you be honest, act with integrity. If your suppliers do find out that, look, you do have money, you just were hoarding it and trying not to pay anyone, then they usually do come after you a lot more aggressively. So do be honest and do have these open conversations. So let's talk about financial and tax impacts here. You have two situations here where your suppliers are going to take. The first is either they will forgive your debt, and the second is that perhaps they will not forgive your debt. If they do forgive your debt, this will automatically be treated as income. So you need to bear in mind that a reduction in your debt will be automatically taxable in your profit and loss account, and there will be a tax element on this. If your suppliers don't forgive your debt, then they can pursue you legally. So this can mean very many things. They could either engage auctioneers or they could engage lawyers, and they can come after you. So if you are in a situation where you are finding that, look, I cannot pay my suppliers at all, and I have a feeling that they may pursue me legally, it is very, very important that you get legal advice. More so if you are a director of your company, because you can be held personally responsible if you are deemed to have acted without due care and diligence. What I'm trying to stress over here is that directors are required to act in the best interest of the company and not in their own personal interest. So suppliers are going to obviously try and prove the latter rather than the former. So it's very important that you seek legal advice. Okay, let's talk about inventory. Inventory is a very quick slide. I'll give you the accountant's perspective because I am an accountant. Any inventory that you have bought or you have made and is ready to sell, but you are unable to sell, is considered a sunk cost. This basically means that whether you are able to get money out of it or you are unable to get money out of it, you've already lost the money that it took to make it or to acquire it. Therefore, stock that you cannot hold for the long run, you need to liquidate it as quickly as possible. I'm talking about perishable goods. I'm talking about goods that spoil quickly, goods that are maybe chemical in nature that may oxidize and may become obsolete. You need to liquidate these goods quickly so even if you reduce the price of it, get rid of it. If, however, your inventory has spoiled, then you are entitled to a tax deduction on the value that has spoiled. So if you have food products worth 500,000 and all of them have gone bad, you can get a tax deduction on that. So if you are in this situation, speak to your accountant and keep them abreast of what's happening. So the last area is contractual obligations. Contractual obligations are primarily banks, landlords, and staff. What's very important is that you have verbal conversations first, primarily meetings, to discuss the levels of support and changes in contract. So if you are going to send your staff on unpaid leave, or if you are unable to pay your landlord, or if you're unable to pay your bank loan, understand that what is happening here is you are creating a change in contract. So it's very important that you have a discussion first. You also may need to speak to your lawyer about the implications of breaking that contract. Now, there were two very well put together webinars that EPB had did in the past. One was on staffing and one was on the relationships between landlords and tenants, both of which I listened to. What I took out of them was that it's fundamental to put things in writing. It is absolutely imperative that you get consent. You cannot just wake up one day and say, I will not pay my landlord or I can't pay rent. You need consent. Also, if you send your staff on unpaid leave, you need consent for it. So it's very important this is documented and put in writing. So I'll talk a little bit more about this when I get into some of the case study examples. Okay, so let's move into now some practical examples. We've worked with a lot of clients, but I've particularly picked a hotel. And the reason I've done that is because, in my opinion, the tourism sector has suffered worst. It's going to take the longest time to recovery. And I feel that other services like manufacturing or professional services will be needed sooner rather than tourism. So I'm picking a difficult business. And hopefully, when I share some of what we have done with our clients, you can pick and choose what you feel is applicable in your business and take advantage of it. So let's go through the immediate short-term strategy. The most important element over here is cash conservation. The reason for this is because we're talking about a long period to recovery. So the more cash you are able to hold, the better you will be able to fare in the long run. And remember, there is a cost to restarting your business. So the more cash you can hold, the better you are when it comes to restarting. Other areas of immediate strategy are debtors collection. So this particular client did have some debts owing from customers. I'll share what we did there. Restructuring borrowing, I'll talk about what we did over there. And lastly, negotiating terms with suppliers. Once all of this was done, it's very important to prepare a cash flow. Now, if you're just going to prepare a cash flow and stick it in your drawer and never looking at it again, then you're wasting your time and you're wasting your energy. There's no point in doing that. The whole point of preparing a cash flow is actually sticking to it. You have to monitor your performance consistently when you've done a cash flow. With this particular client, we are monitoring performance every single week against that cash flow. And we're looking at what cash do we have now against what did we project. And if we have messed this up in any way, or we've over or under projected, then we take immediate correction and we fix it within the next following week. So by the end of the next week, we're now back on track again. So it's critical that you adopt some of these practices as well in your business. So the first thing that we did was understanding costs. What we did was we took our client's profit and loss account and we only focused on the expenses. We ignored all of the income and we listed all of the expenses from highest to lowest. We then took out anything that is non-cash in nature. So remove non-cash expenses. These are things like depreciation, amortization. They are not something that you can do anything about. These are accounting entries that are in your statement. So focus on everything that is cash. Once that is done, it outlines for you where you need to spend your energy. Now, in this particular case, because it's a hotel, the top three expenses are essentially your staff costs, your utility costs, and repairs and maintenance would be another one. Borrowings also would be kind of up there in the top categories. So if we just look at those 3-4 examples, staff, borrowings, utilities, and maybe repairs and maintenance, it outlines for you where you need to spend your money. So let me talk a little bit more about these in the next slide. Let's talk about staff. In our case, this was the biggest item. We immediately sent all of our staff on unpaid leave. Now, in our benefit, this was an industry problem. So we could explain to the staff that, look, the entire industry has had to shut and everyone in the industry has gone on unpaid leave. But you may be in a business where you are finding that I actually do need to now make this decision and I do need to send my staff on unpaid leave. If that is the case, it's very important that you have a discussion and you document the consent. Secondly, we retained a skeleton team to handle administrative and financial duties. I'm only talking about 2 or 3 people here. But remember that VAT still needs to be filed, PAYE still needs to be filed, all your tax returns still need to be dealt with. We've had, a situation over the last 1 year where KRA has been sending out these automated VAT assessments. Those still need to be dealt with. So you still need someone to handle all of this administrative stuff for you. So don't ignore it. You may consider outsourcing if it's cheaper. And a lot of our clients have done this. They've looked at cheaper accounting firms to do work for them. But it's very important that you find competence. Don't compromise on your competence because it'll hurt you in the long run. We then looked at changing our salary structure. So for some of our sales team, instead of paying them a minimum wage or a reduction in wage, we shifted them into a commission-based structure. And we asked them to come up with ideas of how we could sell. And this worked remarkably well because we do have an F&B department. So we still are selling food. We're looking at selling on delivery so people can order online and it would be delivered to them. So we're basically competing like any other restaurant at the moment. But this worked very well for our sales team because it allowed them to still earn some sort of an income. We empowered them by embracing their ideas within the business, so they felt like part of the business. And it worked for them because the more they were able to sell, the higher their commission. Now they are earning less than their normal salary. So let me be very honest, they are earning less. But when I speak to them, they say, look, I would rather earn something rather than nothing. So the fourth point here is that you have to keep in mind that those staff that wish to resign are entitled to this choice. Even if you send staff on unpaid leave, you cannot hold them back from resigning. And if they do resign, you have to pay all of their dues. So what we did in this case is we worked with our HR team and we said, bring all our staff files up to date. Calculate everyone's leave, everyone's dues. If you're in a business where you're bound by union contracts, please review those union contracts and work out everyone's dues in a very comprehensive manner. So that if someone wishes to resign, you're not panicking trying to work out what do I do and how do I pay them and all that kind of thing. The other benefit of this is that it allows you to comprehensively come up with a total debt in case all of your staff were to leave. So you can now plan a little bit better. Okay, so let me talk about suppliers. Now with suppliers, it's very important to agree on a payment plan. It's very important to communicate with your suppliers. You still need a number of your suppliers. You need utilities. You probably need security. You need internet. So what we did with our suppliers is we did have some debts with them, but we spoke to them and said, look, allow us to pay the current bill. And then once the situation recovers, we can then look at a payment plan for all of the outstanding debts. Our suppliers were very understanding. And a lot of them came back to us and said, sure, we're willing to work with you. We don't want to lose your business. And they respected the fact that we were able to pay the current bill. We also had some large suppliers, so those that had very big balances, and these are big companies. We asked for 3 months grace. They accommodated us. So please do take advantage and see if you can do the same thing. So banks. Banks is critical because we need banks. We can't work without them. And yet banks also have a lot of obligations and requirements on them. So what we recommend is that it's very, very important as early as possible to meet with your bank manager and start having discussions. In our case, we immediately went to work to start talking about providing a moratorium on the borrowing amount. Some banks may give interest, though the likelihood is very low. But on principle, they're willing to work with clients. So request a moratorium for as long as you can. If you need an increase in an overdraft, it's very important to discuss that as well. Bear in mind that banks, in order to provide you with anything, will ask for cash flows. So if you are unable to prepare this, speak with your accountant because you may need him to prepare these cash flows for you. And the other thing that I would like to talk about with banks is that push for restructuring your loan or reducing your interest. Now, when it comes to restructuring your loan, banks can give you a moratorium, but they can also extend the period of your loan. And what they can do is revise your payment downwards. So you still have to pay the loan, but now you're paying over a longer term and a smaller amount. So this will greatly, greatly assist you when we're talking about recovery, when you need to restart your business and you still have a bank loan to pay. What you want to do is minimize your contractual obligations as much as possible and free up some cash or free up some overdraft so that now you can reinvest in your business and start up again. Inventory, very simple. Discount, sell. We basically discounted our inventory. We cooked it as quickly as possible. We marketed it online and we just sold it as quickly as possible. So inventory is cash sitting in your business. Move it out as quickly as possible and try and do the best that you can with moving that stock. So the last thing I'd like to add is that use the time. You know, this is a rare occasion that allows you to bring your records up to date. Think about your staff files. Think about your outstanding debts. Sit with your accountant and ask yourself, how do I clean my business up? If you've got legacy tax issues, you know, now is the time that you can clean them all up. If you can work with your accountant and say, look, I need your help to clean this up. Give me also a payment plan. Firms are willing to do this. They want to support their clients. They obviously want to keep business. So do try and take the time to clean up. And more importantly, look at reinventing your business. If you have become a business that has become very heavy on costs, huge staff components, huge overhead, look at how you can become leaner. Try and invest in greener energy or solar energy that cuts down your electricity costs over time. Look at outsourcing. A number of our clients are outsourcing to India because they're finding it very, very cheap now. So think about all of these things. The leaner you are right now, the stronger you are. So that's very, very important. Thank you very much, Rahim. And thank you all for listening.
Thank you very much, Rahim. That was very, very insightful. Coming up to our next question. In Kenya, there's been some recent changes to the Tax Act. A lot of businesses have had to downsize in terms of staff and operations. Can they take advantage of some of these new tax incentives? And what are the key considerations to keep in mind regarding this?
Okay, so I'll share another presentation as well.
Okay.
Okay, so this presentation on tax, it's this is not necessarily a tax webinar, and so what I want to do is there are certain tax incentives that have come out, but I will narrow this down very specifically because it can get quite complex and we can really shoot over our scope here. So let me talk about a number of important things before I get into it. A number of changes have been made. There have been a lot of changes to the amendment of the Income Tax Act that came out in April. I would like to stress very clearly that some changes will be beneficial to your business and other changes will not be. If you are in a business that has any form of complexity, so if you're in tourism, if you're in manufacturing, if you're in agriculture, if you're in development, if you have large volumes of business or large staffing, if you're in import, export, please speak to your financial advisor or your tax advisor or your accountant. There are so many changes that have come out, and like I said, some will be good for your business and some will adversely affect your business. So it's very important, if you're in any one of those businesses, please speak to your accountant and understand exactly what the impact is going to be going forward and how you can plan effectively. Now, what I would like to talk about is turnover tax. So turnover tax has been the question that has come my way the most from most sources, and I'd like to focus on this for purposes of this presentation, if you don't mind. Turnover tax is applicable if your business has revenue between 500,000 and 50 million. Now, the rate of turnover tax is only 1%. Previously, it was 3%. It's been reduced to 1% now. So this becomes even more attractive. Turnover tax is a final tax. So once you've paid the 1%, you don't have to worry about filing annual tax returns. It reduces your cost of having auditors and accountants and all that kind of thing, because you don't need to maintain such extensive records and all of that kind of thing. You are taxed only on your revenue. Now, one of the very welcome changes that came about is that limited companies were now eligible for turnover tax. Previously, turnover tax was only for unincorporated entities or individuals. So this is a very welcome change because there were a lot of small companies that were within this bracket, and they can now very much take advantage of turnover tax. There's another small benefit, is that the late filing penalty has reduced. Basically, what the government is trying to do is they're trying to onboard everyone onto turnover tax or to pay some sort of tax. Kenya has historically had this culture where people would not pay tax. That obviously hurts our economy. So this was an incentive to bring everyone on board and allow them to now start paying tax. So who is not eligible? Well, if you have rental income, if you have management or professional fees, or if you have any income that is subject to a final withholding tax, you do not qualify for turnover tax. What is very important is this concept of professional fees, because this can become a little bit tricky. Now, if you're someone like myself, who is a financial advisor, it's straightforward. I am a professional and I do not qualify for turnover tax because I render professional services. But let me give you an example. Suppose you're in security and you have now outsourced, or a company has outsourced its security services to you, where you provide CCTV, maybe you provide some sort of security guard, or maybe you provide some sort of software monitoring. Most clients have kind of taken this approach where they pay over a period of time. If you have the right to switch off that service when the client has stopped paying, you may fall under this category of professional fees, because what the client has bought from you is still dependent upon your service that you're providing to them. So if you're in this kind of a hybrid zone where it can get a little bit confusing, please talk to an advisor or talk to your accountant, because you may think you are eligible for turnover tax, but what you have to be very careful of is KRA's interpretation of your business, not necessarily your interpretation of your business. So I hope that was clear. But if you're in any sort of trading, you buy and sell products, you make jewelry, or you make pens, or whatever it is, and you are within this small scale category, you qualify for turnover tax. So how do you apply? It's very straightforward. Turnover tax is an obligation. It's linked to your PIN. To apply for it, you just log into your iTax and you select your turnover tax obligation. Please note it's not automatic. KRA will review your business and they will review the kind of transactions you have, and then they will give you your consent. But it's a very straightforward process, so nothing to worry about too much there. And lastly, what to consider. So just because turnover tax is at 1%, it doesn't mean that everyone should just run out and apply for turnover tax. You need to think about whether turnover tax is applicable to your business. Turnover tax is beneficial if you have low expenses and low overheads. Then it is beneficial. If you are a startup, you are generally going to make losses in your first few years. You may not want turnover tax because you want to carry forward your losses into the future. So I'll give you an example. Let's say that you start in your first year, you have no revenue. And in your second year, you have a little bit of revenue, but you have quite a significant number of costs that you've incurred. Now, what's going to happen in this case is you're going to pay tax on your turnover, and you can't utilize your losses either. So you're kind of in a lose-lose situation here. So what I suggest over here is that if you're in a very simple business where you buy and sell inventory, then it's fine. Turnover tax is good for you. But if you're confused about this, please speak to your advisor or speak with EPB, and they can also share some guidance for you. The last thing I would like to add here is VAT. The VAT threshold has not changed. It's still 5 million. So if you are exceeding 5 million in revenue, you may come into this category where you have to pay VAT and turnover tax at the same time. So please bear that in mind. Thank you very much, Rahim. I hope this was helpful for everyone.
Thank you, Rahim. That was very, very insightful once again. Thank you so much for that information. And finally, we want to ask our last question. I think during this pandemic, some businesses appear to be making a decision to shut permanently. What advice can you give regarding this process?
Okay, so I'll share my third presentation with you. Once again, I'd like to add that all of my presentations will be made available. If viewers of this webinar would like, I will share them with EPB, and EPB can then share them with anyone else who is interested. So what I'd like to talk about when it comes to shutting down your business is that it's very important to bear in mind that this is a very emotional decision that people have to make. People have invested a number of years, maybe even in operating their business, in developing the concept, in building relationships with customers and with staff. And so now to shut down your business, it's difficult. It's a very difficult thing to do. I've had to shut down a business myself, and it's challenging because you build enormous relationships with people. What I would suggest first and foremost is that don't make this decision out of fear and panic. Yes, the situation is difficult, but if you seek support, there are ideas that you can come up with where you can look at how to leverage some of the resources that you have and prevent yourself from shutting down your business. So, the point of this webinar is to pivot. So if you're in a business where you're finding it's extremely difficult and I need to shut down, think about how you can pivot. So first and foremost, explore options. Think about what options you have. Talk to people that you trust. Talk to people that are creative and see what you can do. And secondly, make sure that you seek tax and legal advice. I would like to stress very importantly that it can be expensive to shut down your business. I talked earlier about legal contracts that you have. There is a cost to breaking those contracts. If you want to shut down your business, there is a cost also from the tax side. And I'll discuss this a little bit further with you. But if you have made the choice to shut down your business, it is critical that you shut down your business gracefully. Because what you want to do is close your business without having any baggage, without having any debts that will now chase you in the future. You want to close clean, and you want to shut down with integrity as well. So I talked about contractual obligations. This is probably the most important thing that you need to think about when you're shutting down your business. Most people will have a lease, they will have staff, they will have borrowings, and they have suppliers. Now, with some of their suppliers, you may be in a contract. All of these will have issues. If you're going to terminate staff, please think about how you're doing it. If you're going to end your lease, please think about that. Read your lease, understand the costs of termination. Banks will also not let you simply just wipe away the debt. You may have pledged assets against your borrowing. You may have your personal guarantees that you have given against your borrowings. So if you are going to simply shut down your business, you need to speak with your bank or your advisor to talk about what happens in these situations. So before you shut down, I will now talk about the practical things that you have to do. So before you shut down your business, you have to clear your debt. This is a lot harder than it sounds because sometimes you may not have enough money to clear your debt. But what you can do is work out either some payment plan with your suppliers, or if your supplier is agreeable, then the debt can be assigned to another company or to yourself as an individual. That may be one way that we have helped clients with shutting down their business. The other thing that you have to do is that you have to collect money from your customers. Now, again, your customers may not have money to pay you. So you need to think about the situation. You could, as a director and shareholder of your company, assign the debt to yourself as an individual, and that way give your customer some time to pay you personally as opposed to paying your company. The next thing you need to do is to transfer out your assets or you sell them off. Now, you need to be very careful because if you are selling assets, then there could be VAT implications over here. There are some situations where you can be exempt from VAT when you sell your assets, but it depends on the nature of the transaction. So it's very important you get advice over here if you have assets that you are selling. If it's inventory you're selling, it's straightforward. Just sell it off or liquidate it and you're good to go. The last point I want to add over here is that you must get support from your accountant. Your accountant needs to walk you through this process. Your accountant needs to understand what is happening at every step of the way. They are going to have to do work for you. So it's very important that you have someone holding your hand. If you've never done this before, this is the first time that you're doing it, please get support. You know, sometimes it's important even to get emotional support during this process because it can be extremely overwhelming. And you may face aggression from people. You may face aggression from staff or suppliers when you have to shut down your business. So it's important to find strength. But if you can't find that, please get financial support along the way or tax advice support along the way. So that process that I discussed in the previous slide is something called zeroing out your balance sheet. You're clearing everything out. You're clearing your debts, clearing what people owe you, clearing your assets. You're basically ending up with just money in the bank, if there is any, and whatever is owed to a shareholder. Once you've done all of that, you can now, you then have to initiate the process of wind up. Wind up basically means that you deregister your company with the company registrar and you deregister your company PIN with KRA. Now this can take time. It's not automatic. Even for KRA to deregister your PIN, KRA needs to be certain that you've cleared all of your debts, your tax affairs are all in order, and then and only then will they deregister your PIN. So that's what I'm saying is that if you have time now to sort out your tax affairs, please do so because you will need that in order to deregister your company. Now, during this process, your tax obligations have not ended. You still have to file PAYE. You still have to file VAT if you have to. You may not have any operations and you should not have any operations, but that means you need to file nil returns. Now, you may need your accountant to do this for you in the interim process until your company is deregistered. So please keep this in mind. Now, all of this that I have talked about, all of these items over here cost money. Deregistering your company, you need your company secretary to help you with that. Deregistering your PIN, filing returns. So keep in mind that there is a cost to shutting down your company. So I just talked about this, ending your lease. Staff dues is something that's very, very important that I would like to stress. You need to be very clear whether you are terminating your staff on the basis of redundancy or retrenchment. They are different. Redundancy means the role that the individual had is no longer relevant, that they can't do that role anymore. Retrenchment is I've been making losses over time and I don't know what to do. But you may be in a situation right now where you may not have had losses over time. It's just that the coronavirus situation has crippled your business entirely. So how do you classify your staff in this situation? It can get complicated. So it's important that you seek advice over here. And lastly, I talked about the costs of wind-up, but remember that there are potential legal fees. Just because you have settled your debts, it does not mean that other people may not come after you. So please keep this in mind. You may need to engage a lawyer to help you with settling some of these cases before you can actually shut down. So I know it's a very difficult topic to discuss. I want to be very clear about the process, and I want to be very clear that you must get support. But the last thing I would like to add is that don't rush into this. It's complicated, it's technical, and it's heavy. So if you have the chance to pivot or reinvent, that is a much better option. And there is lots of advice and support that you can get from volunteers and from EPB in particular. The people on EPB, from my interaction, they're some of the most highly qualified professional people I've interacted with. So if you are considering this, please reach out and get support first before you make this decision. Thank you very much.
Thank you, Raheem, once again for this. The clarity, the insights, and the recommendations. It is now more than ever very clear that level-headed, clear thinking is required. And a lot of time and energy must be devoted to detailed planning for businesses to navigate through this uncertain time. And there must be focused attention on execution. This will ensure that businesses that do survive will be financially fitter, be able to withstand threats, and more importantly, more agile, and be able to take advantage of new opportunities as and when they present themselves. Thank you once again, Raheem. At this time, I think we would like to move on to the next part of our webinar, which is shaping of the new normal. Things are very unclear at the moment. The economy is in lockdown, and this cannot go on indefinitely. The president of Kenya has now said that the economy will open up again, but the Ministry of Health and other international institutions are also saying that the cases of the virus will peak around mid-August, September, possibly longer. This means that for the next 4 months, things will not go back to the normal that we know it to be. So maybe Al-Karim, if you could give us some advice and guidance on what you feel based on your interactions with your customers, your peers, on what we're going to be looking at as time moves on.
Thank you, Raheem. One of the common phrases that has emerged in the last few months is that the world will be entering into a new normal once the COVID-19 pandemic is all over. Over the next few minutes, we will examine what this world of a new normal could look like, particularly from the perspective of businesses, business people, and professionals alike. To my mind, there are 3 key dimensions that could define the shape of the new normal. Firstly, distance is back. In the last several years, thanks to the rapid advances in technology and in communications, we have seen the world becoming increasingly connected and interconnected. Indeed, the world has become a global village. More recently, however, we have seen a reversal of this trend of globalization. The emerging political leadership in many parts of the developed world are now leading the call for a reversal of globalization. Brexit is one such example. The America First policy pursued by the Trump administration still continues to find great appeal amongst the average American. The question to ask then is that has the pandemic accelerated this call and pace for a reversal to globalization? Indeed, the restrictions in the movement of people and goods means that in the new normal, businesses will find an increasing preference for sourcing for their inputs, their raw materials, their finished goods that they sell to their local markets by sourcing such products locally. Businesses are likely to place a greater premium on continuity of supply over just-in-time deliveries. And so the question to ask domestic businesses is that can they rise to this occasion? The second phenomenon that could shape the new normal is that consumers are likely to place a greater premium on those businesses which show resilience and which operate efficiently. So what do we mean by resilience? Businesses that are able to absorb shocks and come out better than competition are likely to be preferred. It will be all about the survival of the fittest. Business models that are able to run on a lean basis, that are able to cut operating costs, business models that are anchored on variable costs versus fixed costs are likely to have a greater chance of being resilient, as they will have de-risked themselves from the effects of future disruptions. Another key emerging characteristic in the new normal, particularly for businesses that are dependent on key persons to operate, will be that consumers will be looking whether these businesses have robust succession plans, which guarantees them a continued relationship and of services. The third phenomenon that could shape the new normal is what we are seeing now as the rise of the contact-free economy. During the time of the pandemic, we have seen, thanks to conforming with social distancing protocols, preferences emerge for home deliveries, for online shopping. We've seen virtual meetings take a foothold. And so the question will be that in the new normal, will these measures, which have been forced upon us due to social distancing protocols, convert into habits and preferences? Will these become part of our daily behaviors? And if so, what this could mean is an accelerated rise of digital commerce. We could see telemedicine, where patients no longer have to visit their doctor's clinics to get consulting advice on medical issues, able to engage their medical professionals and consultants via the telephone. We will see an increasing use of virtual showrooms for businesses to showcase their products. Already we are seeing in the West examples of Airbnb operators who now have vacant rooms and houses are instead turning to offering virtual travel experiences to the end consumer. So, as the new normal begins to take shape, are there opportunities for businesses to take advantage of the short term that could convert to long-term relationships? I think it is important to emphasize that today, as we go through the pandemic, it is not all doom and gloom. There are pockets of businesses that are doing well in this crisis. Take the logistics business, the business of delivering food, of medical supplies. These are thriving. We've also seen examples here in Kenya where professionals and business people are monetizing what used to be their pastime hobbies. There are cases of entertainers who have converted their hobbies of baking into full-time online business operations. There is a case of a Jamaati member who runs a hairdressing salon who has now turned to full-time delivery of food deliveries and of catering. The question, therefore, that arises is that does your business have the capability to rapidly pivot to take advantage of these new emerging opportunities? The second point that I would want to stress is that of collaboration between large businesses and smaller players. Is it possible for large businesses to take in smaller players and make them a part of the ecosystem? Can small businesses reach out to the larger ones and leverage on their infrastructure, on their assets, on their distribution networks? Again, there is an example here in Kenya where a dry cleaning business, which has a fleet of trucks, which currently would remain idle because of the social distancing measures and because of the impact on that business, is now partnering with other players and providing this asset, this fleet of trucks, as the ability for the smaller businesses to be able to distribute and market their products to newer markets. There is an English saying that goes, necessity is the mother of all inventions. The time to collaborate with one another, small businesses and large businesses alike, is now. It is important, more than ever before, for Jamaati businesses and business persons to collaborate and hang together, because if they work on an individual basis, they are likely to hang separately. As the new normal begins to take shape, there are a few important considerations that businesses and professionals should bear in mind. Firstly, I think it is important for businesses and to sit in the mindset of the consumers. Definitely, there are changes that are going to emerge in consumer needs and habits. Spending patterns are likely to change as incomes of consumers erode and as they become burdened with new debt during the time of pandemic. There is a likelihood that your consumer, post the crisis, will opt for low-cost, reasonable value products. On the other hand, could there be pent-up demand for goods and services from consumers who are not able to access these during this time of the pandemic? Will customers buy through the same channels in the new normal? Will new habits form during the crisis? And will they stick when things go back to the new normal? And most importantly, is there a new competitor that has emerged during this pandemic that your business will have to deal with? Has an old one crashed? Many in the audience may be able to relate to the story of Skype and Zoom. Skype was undoubtedly a leading video conferencing app just a couple of months ago. And what we have been witness to in the matter of a couple of months is the rapid rise of Zoom. And will Zoom continue to dominate in the new normal? The second important consideration is the relevance of core competencies as they exist in business models today. And perhaps this is best explained by way of an example. If you take the case of college or school education, during the crisis, all physical classroom teaching sessions have been suspended. Some of the students of these learning institutions have switched to online classes. Online learning is now a routine. And if this becomes the new normal once the crisis is over, learning institutions will have to invest in a lot more technology, in IT professionals, in new learning materials and tools which can be digitally delivered if they are to remain relevant. The big question is, will your core strengths as they exist today still be aligned with the new market trends of the new normal? If not, this is the time to invest in new capabilities and in new skills and in changed mindsets for business people so that we align to the realities of what will be the new normal. The third consideration is the concept of the selling model as it existed before the pandemic. If your business was heavily dependent on face-to-face consumer interactions and sales experiences, how relevant will this be post the pandemic? What will happen if face-to-face networking doesn't make it to the new normal? Businesses will, from today, have to think about adopting a hybrid model where both face-to-face as well as virtual consumer interactions and experiences will have to be adopted. And this will introduce significant new dynamics to the business model. Businesses will have to find a new way to connect with customers and to continue to demonstrate value and remain relevant. In ending, I want to strike a note of optimism and courage. COVID-19 has certainly thrown a lot of uncertainties for all of us. And uncertainty in itself could breed a lot of fear. Like COVID-19, fear is contagious, but so are optimism and courage. And these qualities, optimism and courage, are needed now more than ever before as business leaders make those difficult decisions so that they can align and thrive in the new normal. Thank you.
Thank you very much, Al-Karim, for that very insightful piece. I think it's very important that the Jamaat looks at the new thoughts and the new trends that are now coming out because of this pandemic. It has to be thought through very, very carefully. Once again, many thanks to Al-Karim Jiwa and to Rahim Mauji for participating in this webinar and for sharing their time, knowledge, experience, and insights. Al-Karim and Rahim have very graciously accepted to have their slides available for members of the Jamaat if they wish to have them. Please contact the EPB offices in Darkhan Jamaat Khana. Before we go on to the third part of this webinar, I'd like to share one, I think, a very important quote from Winston Churchill, which is, "Never waste a good crisis." I think we've got lots of really, really good information from our panelists, and we hope the Jamaat will take full advantage of that. Coming on to our last part of the webinar, it's the part of pivoting your business to the new normal. And for this, we have a case study of Ms. Nafisa Rayani, who is the CEO and founder of Honeycomb Jewelry. Thank you, and Yali Mada.
Thank you, Rahim. Hello, and Yali Madat. My name is Nafisa. I am a jewelry designer and an entrepreneur. I look forward to jumping onto the next segment of this webinar and sharing a little bit of my journey with you, how I began my business about a year ago, the challenges that I faced and how I managed to overcome those, and what I've done in the current situation to change things around for my business so that I can survive this storm. And also some of the wonderful new opportunities that are looking up for my business in the new norm. So I look forward to it. See you then.